Good morning, traders. Thanks for joining me. Sorry about being late. It's 8:03 a.m. Chicago time on Monday, the 13th of June, 2022. This is episode number 2252. This morning, I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Thank you so much for the mic check. Risk off sentiment overall. Kind of a challenging day so far, given the data issues and so on. Let me move this side of the way. This roll, just a quick summary of what's going on. I will be quoting June during this video, but actually, you should be trading September. The roll should have begun today, but my data feed, which just adjusted, my data feed had stuck with June. They just switched to September here mid-session. So it's throwing things off. But going forward, the ES, and I still ask the exchange why the ES roll has moved from Thursday to Monday, but then it remained the same for the Dow, NASDAQ, and Russell, where the roll was on Thursday. So it's just kind of throwing everything off, but please understand that I am quoting June for ES, September for YM, NQ, RTY. This is very, very unusual. Anyway, the market is in a risk-off stance currently. Risk assets hit globally. The markets are repricing inflation risk, and it's not so much the Fed policy that the market is concerned about. The bigger fear, and it's justified. By the way, we are in the ES. We are below the last swing low. We'll look at that in a minute. The concern here is justified in that inflation was expected to have slowed down. And what we learned on Friday, that and the Michigan sentiment numbers, we've seen that actually it is not slowing down. So the bigger concern, yes, the Fed will continue to do its thing, and it's probably they're pricing in 75 basis points potentially coming into this week. The probability of the FOMC raising, which is on Wednesday, raising by 75 is increased. But the real concern is, whether or not inflation is actually topping or it is a runaway train. Excuse me, it's a runaway train, and it may go into 9%, 10%, 11%, 12%, whatever. This is what the market is responding to. In addition to that, we have expiration week this week, triple witching on Friday, which also adds a little bit of a kink to trading, in that options, futures, options on equities, options on futures, and futures will expire on Friday, therefore pushing the market around. Take a look at your crypto. Crypto getting hammered. We're pushing into the large support on Bitcoin in the 21-22 area, and ETH is near $1,000. This product was $4,000 just a few months ago. Pretty amazing. Again, we're seeing markets getting hit across the board. We're seeing the treasuries also lower, so there isn't an allocation to safety there, although they're holding up a little bit better than equities. And I'm expecting in the current configuration that it'll continue to bleed. Please notice the rotations updated for this week here: 8.5 for the ES, 32 for NQ, 4.5 for RTY, and 55 for the YM are the harmonic rotations based on a 1-minute chart, swing high, swing low from the mode. These are likely to expand this week. The only one that expanded last week over the week before was crude. Everything else kind of fell. but we had selling later in the week, and that's likely to put pressure on rotations and expand them, which means we need to reduce our size or widen our stops and our targets to compensate for the additional volatility. The ES is in a multi-distribution profile, almost B-shaped. This is a long liquidation configuration for the ES. 100% of the volume occurred below the prior settlement. The market is 100% short, 79 points of range. The point of control near 3,800, again below the last swing low. Pretty weak, and we are not coming off the bottom. So you can see the point of control 3805 is near the low at 3797.50. So this immediately tells you the configuration is such that and price being where it is at 3806, right around the point of control. This is a weak market coming into today. So rallies are likely to be sold. We'll see how that plays out. Let's take a look at the overall picture here by checking out what the narrative has been. The narrative, we've been balanced up here at 40.70. If you recall, we broke through. Really nice break here. Excellent trade from the 76 down into the 40.15. The 40.15, we talked about this last Friday. Really nice break on Thursday, and then Friday came in and gave us a really large gap, 226 ticks, 226 tick gap, really big gap on Friday's CPI. There's a gap within the session. Look at this. There's a gap within the session. You don't often see that, to be honest with you, where the market gets hit so hard that you end up with a gap that's unfilled within the session. Pretty aggressive. Then Friday, relatively orderly selling. There were no single prints on Friday. It was pretty well organized, and we ended up with a weakish low on Friday. We actually ended up pushing back up pretty deep on Friday to the full session VWAP, only to close weak. Friday's close was very, very weak. Coming into today, the expectation is that coming into today after Friday's close, the expectation is that we would be lower. And the June contract, which I'm quoting the June contract, should be quoting September today, but I'm quoting June because of a data feed issue for back adjusted data. I will definitely be trading September tomorrow, but 38.99 is where we closed. Where we settled. We settled right near the low. This is a very, very weak low. We settled below the point of control at the low end of the weekly range. So we expect it to drift down, and then we expect it to push toward the last swing low, which was 38.07. And so this is where the point of control, the current point of control being at 38.05. This is where I'm saying it looks like we are 38.07 actually is the point of control. This is where we are incredibly weak. So this is likely to go here. This low is likely to go. We're not able to push back into the mid or full session VWAP, and it's just thin air below there. The key support below is at 37.50. That's the next big area down below us. The 37.50 is an MC point of control that hails back from, let's look at my chart. This is a composite area from December 2nd of 2020, until March 8th of 2021. We were in a big balance zone. We'll look at it right here. This balance zone right here, we were stuck sideways. You could see month 1, month 2, month 3, and almost into month 4, halfway into month 4 before we broke out. And The point of control is outlined right here at 37.50. That becomes your key support for today. That's this black line pushing forward. So if I forward this chart and we look at what we've done, you could see here's last week. We could see the big sell-off on Thursday. We could see the massive gap, the big gap on Friday, and the B-shaped profile on Friday, having pushed through a lot of the support areas from before and pushing into this swing low of 38.0750, and then this morning having done the overnight point of control at 38.07 basically. Let me verify that. 38.07. We are really opening and we are balancing right at the low, right at the last swing low. So this is an impulse down, consolidation, an attempt to push higher, and continuation likely to come. Next big area down, of course, 3,700. Below that, 3643. Below that, 3504. We are really pushing through. So we've made it through the valley. If you look at the composite to the right, see this composite profile to the right, we traded a whole lot in that 41.47 composite point of control. We've made it through the valley. We've come out the other side right here at 38.50, and we are below that, and we are about to clear the next smaller peak, and then to work ourselves from peak to peak to peak and so on. This is the habit of the market, is to go from balance to imbalance to balance to imbalance to balance and so on, and rotate back and forth, back and forth, back and forth. That's the job of the market, is to find as many buyers and sellers as possible, and the only way it can do that is to find a fair price. And the fair price is where balance occurs. So the market's expected to be attracted or magnetized back into balance, and it reprices on imbalance. And what we saw, we've had balance for quite a few days here, and what we saw on Thursday is an imbalance on the sell side. So the market here seeking buyers, and it failed to get good buyers on Thursday. Then the number comes out on Friday, and it's advertising lower to find those buyers, trying to find balance, and it couldn't find balance on Friday because it closed at the low, quite weak, and so it continues to move down, and it's looking for buyers near the lows. It's not able to find them. I don't have indications that the market has found any buyers at this point. If it has not, then what does it have to do? What do you think? What does it have to do to find those buyers? I'll give you the answer. It has to keep advertising lower prices. This is how your local store works. If merchandise is not being moved, if we cannot find balance both ways, we'll keep advertising lower prices. How low can we go? Good question. We don't know. Nobody really knows, because nobody's aware of what areas participants are likely to keep coming in, or what areas participants will stop distributing their holdings. And coming into expiration this week, that information is quite muddy. So, if we look at the composite, let's pull this back. If we look at the composite, we've had some pretty decent areas of support. To me, the 35 to 35.25. This area here represents major potential support. That comes from way back here. Okay, this represents major potential support. We are already beneath the 39.08. We are right against this 37 area. I mean, it's got quite a ways that it can go. And then, of course, we've got this very prominent point of control down here in the 3,300 handle, and it could get there. But overall, the market is dumping currently. So that's where we stand. Here's the TPO chart. This is a TPO chart. We've left quite a bit behind on Thursday. Fridays, you can see B-shaped. We've moved from a major distribution down here into a new major distribution. We've skipped the middle. We actually closed on Thursday around that 40.15. That's where this peak is, at 40.15. We've moved through that distribution, and then we created a new distribution down below. And as I shift this down, this only represents what has happened in today's session. So I'll need to pull in more data to be able to see what's going on to the left. To me, this thing is really, really weak. And we would need to see, what would we need to see to change our minds about the selling? We would need to see a major impulse higher and a sustained push. So we're not seeing that currently. Here's today. Good separation, a really beautiful touch of the mid here. Remember, mid, a key area for me. But we have good separation to the VWAP, good separation to mid, and pretty weak lows. You could see these lows, but it could, given the 100% inventory being short, we could see ourselves, we could see this market popping into that 38.25. 23.25. There's a stock zone. You can see this faint gray right here, potentially even pushing into 38.37 to 40. These are the two key stock zones here currently. So 40 and the 25 area. 25 having confluence with VWAP. VWAP is likely to get drawn down pretty strong on the open. And the volume is quite heavy. 409,000 contracts have traded so far, and we're likely to see that VWAP slope down dramatically on the open, and we're likely to see a test into that 38.20 before we continue lower. I'm looking to the short side. What would change my mind for today on the short side is an open that goes to VWAP, consolidates, holds above the 38.20, and really impulses higher and has poor counter rotations, poor selling rotations. This would likely have me target the overnight high, and then we're looking to the gap low, or Friday's low range, which is 38.97. on the June contract. So we would be pushing up here. Unless it does that, just look to the short side, looking for runners today, looking to just sell and hold some sort of a runner into 37.50, 37.25, 3,700, and then so on and so forth. The range today is expected to be between 75 and 85 points. We'll see how that goes. Again, if it opens and we see a response, remember, we are opening well below Friday's range. We're opening in a gap out of range, and so the expectation is, given the 100% short inventory, expecting a strong push up on the open. The strength of that push up will dictate to me whether or not I'm going to be looking to the long side or fading against, again, the 38.25. The big trade, 38.25, 38.23 to 38.25. I want to see what the reaction is like there. I want to see it roll over and start to accelerate, hit the bid, look for the overnight low at 37.97. That gives us about 20 points. We're looking for about 4-point stops for today, and that gives us 20 points. Risk off and let runners run into 37.50, which is your key support for today's session, given the range statistics and given the structure. That's the key trade of the day. So if it doesn't do that, if it ends up impulsing to the full session VWAP, coming back easy and then using this area here for support only to turn through VWAP again, that I'm looking for a reaction at 39.40. There's a small long to be taken, a conservative long to be taken from the 25 into the 40, and a reaction at the 40. If we don't get a reaction at the 40, then I'm going to be looking to push, because it's going to be a short squeeze. It's likely to be a short squeeze at that point, and I'm looking to push into 76.50 for the overnight statistic, and then the gap fill stat at 38.97. Do you follow all that? I'm not going to draw that on the screen. This is what I'm looking for. So the primary scenario, let's clear this up. Primary scenario, pull back, hold the 25 area. So this is the 25 area, 25, 23. And then the next area, 37 and 40. The higher number first. 37 and 40. Looking for it to hold this 25 area, turn over, and then give us the overnight stat at 37.97. And then I'm looking for it to run into 37.50. That's what I'm looking for today. Very large lots are still positive on the day. They're still long on the day, but the others are short. Relative deltas is not as bearish as you would expect. The secondary scenario is an open auction that tests, might take out the low. Then we're looking for an impulse into this 25. If it holds the 25 on a pullback, then we're looking for a long into 40, lighten up on the 40, and then we're looking for 76.50 to take out the overnight high, and then the target becomes 38.97, and this is just a reversion trade. This is an oversold condition. We're looking for runners into that 3900, into the gap, the gap zone close, or the prior settlement is key, 38.99. Okay, I'm quoting June. You might be trading September. The difference between the two for September prices, you just add a 1.5. Add a 1.5. So for September, the prices you're looking at are somewhere around 24.50 to 26.50, and so on and so forth. Okay, good luck today, and I'll catch you tomorrow. Be vigilant with your risk today. Be vigilant. Don't be a dumbass and go and bet a huge amount of your account on one or two trades. That's just dumb. I'm sorry, but that's just dumb. It is expiration week. Nothing good comes out of expiration week. This is a week to hold back and to be very, very calculated about the risk that you take. There are sharks in the water. Don't go swimming out in the open. Don't go swimming out in the open. If you're going to stick your neck out, it needs to be for a quick grab. Don't pull out, come out of your little shelter and stick your neck out too far. It'll get bitten off. I almost guarantee that. And there's very little I can guarantee in trading. Good luck.